All righty, good morning, y'all. It is day 4 of our tax preparation training. And as we said before, we are not necessarily beginners, so I'm not giving y'all the easy ways. We want to kind of pick up where we left off with regard to us having at least a modicum of what it is that is done during tax season. So for that, I would like to do just a little bit of review as we start today's lesson. Let's go. All righty. So, like I said, guys, good morning, Merry Christmas, Happy Holidays, New Year, all of that good stuff. Thank you for being here. Let's make the best of the time that we have with each other by going over what it is that we know and reinforcing what we know to make sure we know it and don't just think we know it. Okay. So I want to start off, like I said before we left last time, with a pop quiz, and I need some interactivity. Show me some love in the private chat or show me wherever it is. I need y'all to tell me a very basic question, just a very basic question. What are the filing statuses? I need the 5 filing statuses, the main filing statuses from you guys. I need them immediately. Let me know what they are. Okay, we got them. Yep, we got head of household. Yes, single, married filing separate, married filing. Yep, there we go. And yay! And the qualified widower. Exactly. Well done, guys. That was an easy one. Easy, a gimme. But you still did get it right. Appreciate that. All right. Now, in addition to that, let me ask y'all, which one of those filing statuses is best for when you have a dependent or more than one dependent? Which one of those filing status is? Yes, thank you. I see it. HOH in the chat. HOH. Yes, head of household is preferred. Now, the only exception I would take is if the head of household is, well, if somebody you file for actually is single, even though they have head of household qualifications, if they don't have a W-2 with taxes coming out, guess what? They're going to get the same results whether they file head of household or single. And in some of those instances, if it's not necessary to file them as head of household to get the same results, I would opt to file them as single, just because we all know what the 4 things that the IRS audit the most are. What are the 4 things that the IRS tends to audit the most? The 4 things the IRS tends to audit the most out of all those other things. Go ahead and hit me in the private chat right quick. Hit me in the private chat. Come on. Yes. HOH, EIC, 1098T, and the dependents. Yes, that is absolutely correct. HOH, and I can just simplify it for those who are not familiar. HOH, all right, which is head of household status. That means they want to know whether or not they actually did qualify for head of household. Earned income credit, did they actually qualify for that earned income credit, or did you do some old crazy stuff to make it so that they do qualify for it? Child tax credit, that's not just whether or not they have children, but did the children reside with them for the last 6 months of that year? And do you have proof therein that the kids did actually reside with the taxpayer? And finally, AOTC, American Opportunity Tax Credit, which is for the school credit. If you can't prove that that school was attended, if you don't have that 1098T form that sometimes looks a little something like this right here, if I'm not mistaken, do I have a copy of one? Yeah, here's one. If you don't have a 1098T form that looks something like this, then there's a possibility that they could summon you for proof. And if you don't have it, then guess what? You may have to forfeit that. And remember, that 1098T form, the 8863 educational credit is valid for 4 years. Outside of that 4 years, then now they come into you asking you, hey, did you claim this 4 years already? That's something new, but that has been happening. All right, fantastic. Great job, y'all. Great job. I do have some harder questions for you now, because one of the things that we did discuss in addition to that was the use of knowledge of the tax brackets, the standard deduction. So I'm gonna show y'all these now, but I'm gonna quiz you on them again later. All right, these are the tax brackets, and this actually simplifies it. Excuse me, not the tax bracket, but the standard deductions. So the standard deductions are threefold. All right. The lowest amount of standard deduction is $15,750. That means that whoever it is that does end up having this using this as a standard deduction, they will actually be able to have this amount reduced from their overall taxable income. And we all remember how we found that out. We looked at the print summary page on our GAAP tax service, which we will look into here pretty shortly. And we noticed that the standard deduction amount would impact how much their taxable income is. So we'll go over that. 15,750 is for the lowest. That's for single and married filing separately. If they are filing single or married filing separate, then they will get that $15,750 discount if they don't have a better option with their itemized deductions. All right. I hope y'all understand with me. This stuff should be common knowledge. In fact, it might be a good idea to go ahead and boot this page on up, because we're about to go in here and use this for review in just a moment. All right. You also will notice that there is the next one. I'm going to skip past the married filing joint, and I'm going to go over there to head of household. Head of household is at 23,625, which is less. Is that less than it was before? That doesn't feel good. Oh, no, it's not. It's more. Yeah, so that's about the same, a little bit more. It's just a small increment. But the thing that I'm a little bit concerned, I'm looking at that married filing joint. Now, married filing joint, typically, if you notice, for the married filing joint one, is simply the single counted twofold. So if you take that single and multiply it by 2, you're going to get 31,500. And that, my friends, is the standard deduction. That's just a combination of 2 incomes, and they get that as a standard deduction. What's the standard deduction? We went over that before. Just in case there's any doubt about it, the standard deduction is on a Schedule A amount. It's an amount. It's what lets you use your qualified deductions. Now, here's another pop quiz question. Shout them out in the comment section. And if you're watching right now, you might see a little bit of a ways to cheat. List for me some of the qualifying standard A deductions that you are allowed to utilize for your client. List for me what are some of the typical standard A deductions that you are allowed to utilize for your client. Some of them. Yes, we got medical, dental, absolutely. Dental, medical. Anything else? All right. Tithe. I like how you said that. She's tithe. Them tithes, boy, and all that. Them tithe, which is also considered charitable contributions, which you'll find under your list of standard A deductions. I will enter the gap right now. I'm going to go over one of my prior samples here. Here's mine right here, Joseph sample. And just to kind of elaborate on that notion of the standard deduction, here you guys will see, if you recall, I was using and I'm going to go ahead and exit and for the full screen for you. Where should I go for my expert class, my tax experts? Where do I go to see where the standard deduction has impacted my file thus far? Somebody give me that. Yes. Thank you. In the prior. Yeah. Okay. It's learning. You go to summary print. Now, I'm not going to lie. It's not the only way, but it's, in my opinion, one of the easiest ways. I'm going to go to summary print. What's the next thing that I'm going to type in? 1040 view. Thank you. It just makes it easier. 1040 view. This is the actual view that the IRS will be getting. And then what do I do? One more. Yes. Second page. Look at y'all. Y'all trying to get out this early. Y'all ain't slick. All right, cool. So we see right here the standard deduction amount as it pertains to this gentleman. Whoa, wait a minute. This isn't a standard deduction. That doesn't look like a standard deduction. That reeks to me as somebody who is tapped into the standard deductions already. Yes, I can tell. Why? Because it's not giving me my standard deduction amounts. Look at this. I mean, this is a little bit of discernment. So this is what a tax expert would do. I'm looking at this and I'm like, that number doesn't match any of these numbers right here. Right? Oh, excuse me. Sorry. Right here. That number doesn't match any of these. That 24,569 does not match the 15,000, the 31,000, or the 23,000. So that says to me that there's an additional amount. That means that instead of the standard deduction, this client evidently presented enough evidence to qualify to utilize their itemized deductions. Some of the other ones that we didn't list before are mortgage insurance, mortgage interest. All right. That's right. We also have the addition, I mean, if you get a little deeper into the weeds, there's also casualties and losses, which you must provide sufficient evidence for as well. And you have taxes. All right. What kind of taxes? Well, validated sales taxes, property taxes, real estate taxes, and things of that sort. So all of these fall under the category of, I'm going to show y'all here. I'm going to go ahead and full screen it, of your deductions, which if you go to deductions, you'll see a whole host of what qualifies. Typically, itemized deductions will fall here. And just for the sake of this exercise, I am going to rid us of the prior listed additional standard deductions just for the sake of keeping everything on one page. All right, so now I should go to summary print, and it should show the standard deduction amount that I'm accustomed to. Ta-da! Yes, the lowest amount. That's because our filing status is hello, single. And guess what? That matches what it shows here. All righty, cool. So I think that that's enough review for now, even though we didn't necessarily go over everything that we did in the past. I do definitely want to move forward so that we can make sure we don't have too much ambiguity on day one as it pertains to some of the additional items that we need to go over. The one thing that I wanted to go over in detail today is the 1099s. Now, last time we talked, we went over entering a W-2, and we had multiple instances in which we were able to enter W-2s and get the results therein. From that, we learned the impact of the federal withholding or lack thereof. Obviously, for those that are unfamiliar, if you have a W-2, that means normally you have federal taxes withheld. Your tax refund will depend heavily, especially if you are not claiming other credits such as earned income credit or AOC or American Opportunity Credit, heavily on how much taxes you paid or had allocated, or as I like to say, contributed to your federal withholding column right there in box 2. So if that is in the right amount or the right percentage, then ordinarily you won't have such a detrimental tax season. I'm gonna do another quick pop quiz question. What is the minimum amount, the minimum percentage that one typically is to allocate to their federal withholding? The lowest amount, the minimum. Hit me in the private, hit me in the chat, hit me in the chat. What is the minimum percentage? I'm seeing it. 10%, 10%, 10%, yeah, percento. Muy bien. Gracias. Well done. All right. That's what I'm talking about. All right. Yes, percento. Notice that no matter, oh, where is my, where did my yes, percento go? Okay, here we go. Notice that no matter how low it is, your refund. Oh my God. Where did my little screen go? All right, y'all gonna have to take my word for it in this particular instance. The lowest amount is no, here it is. I got it. Gosh darn it, that's not it either. All right, I may have temporarily misplaced my slide, so you got to take my word for it in this particular instance. But the fact of the matter is, the way it works is as a tax bracket. Oh, this is even better. I can show you guys again how to find it if you lose it. All right, so this happens while you're with the client. You're sitting there looking like, where's my sheet? Where's my notes? Well, let me show y'all. Here's another option you have for when that happens. And I want y'all to be able to look these things up easily and quickly as well. So let's just go to the Google machine, right? Show y'all what it is that I got right here. And if I wanted to know what it is that the minimum is, then I can go to, let's see, tax with the standard deduction rate, the minimum federal withholding amount is tax brackets, Forbes, tax brackets, standard deduction. Click on the IRS one, scroll down to the one that's applicable to me. And in this particular instance, I think I'm looking at Joseph Sample, which is single. So I'm looking at the minimum. Go away. The minimum here, BM, increase it to size just so we can see it a little better. BM. And this is the lowest. So even if I'm on, let's say, government assistance, or if I'm receiving pension, alimony of sorts or whatever, Social Security, whatever, the lowest amount that I can be taxed for taxable income, that's income that's not to be taxed. Social Security is not taxable income. All right. There are other versions of non-taxable income, such as combat pay for veterans and things that, well, not veterans, but active duty military, things of that sort. But you notice that the very lowest of the income brackets still is being taxed at 10%. All right, this is review. The lowest income of those income tax brackets is still being taxed at 10%. That means if you have anybody that comes into your office that has less than 10%, they're already looking at not having the best of refunds outcome, the best outcome for their refunds, especially if they're looking to get one of those big checks. We have to explain to them, if we can't get it for them, why it is that we cannot get it for them and what to do in the event you do want to get one. And also it might be a good idea to explain to your client that, you ain't necessarily got to get a refund. Like these things are not, I know that, we've tricked ourselves into believing that this is the lottery, but it's not necessarily the case. This is a refund that you get based on taxes that were paid. If you didn't pay taxes or don't have credits like EIC or AOTC and others, then you're probably not going to get back money that you didn't pay in the first place. The way I like to explain it to clients is, if you go to Walmart and go directly to the customer service desk, and you go in there with the saying, "Hey, I'm here for my refund," they'll be like, "For what?" And you'll be like, "Because I'm here for my, I bought a bicycle." "Did you buy it from Walmart?" "No." "Well, then we can't refund you." The same thing works with the IRS. You can't go to the IRS like, "Look, man, I bought a car, I bought a house. You know what I'm saying? Where's my refund?" It's like, you don't get a refund for those. What you get is tax breaks, relief, deductions, and the opportunity to possibly get back some of the taxes you paid. Yes, you do get a boost for your family if you are, quote unquote, a low income household that has dependents that are especially under the age of 23, higher when it's 26, when it's 16 or under 6. But outside of that, and the American Opportunity Tax Credit and a couple other credits that give you money for no reason other than qualifying, you don't just get back money because you spent money. You get money because you spent money and you paid a lot of taxes, such as this young man who paid $15,000 in taxes, even though I'm sitting there trying to do the calculations in my head. I think, let me see, 150. Yeah. That's over 10%, because 110%, 10% would be 150,000 for this person's income. So that should make sense. Now, this is for 2025, but it also is specifically for single taxpayers. Obviously, this changes as you go to married, all right, as we saw here. And that's what this is as well, you recall, all right? And it's different for married, filing separate, which you'll notice there's something very similar. Married, filing separate looks very similar to single. And that's why on this, they just combine them all. All right, so let's go ahead and pick right up with another example. Let's go through a couple of scenarios for this week, and let's get through them together quickly, seamlessly. And I am going to be honest, since you guys are not here for the first time, I'm clocking how quickly you can get through these things, because at this point, I expect you to know how to do it. It's not a matter of whether or not you know where to put the stuff. It's a matter of how familiar you are with the system that allows you to do them in a manner that will make it so that we could increase our efficiency, which allows us to intake even more clients, which is more money for you and the company. And if the company gets more money, that's more money for everybody. All right. So let's go ahead and try dealing with a example for one young lady that I like to call Miss Ima Sample. We're going to talk about Miss Ima Sample today. All right. It's going to be our time today. Ima Sample, fresh from Real Housewives of Atlanta, 2014. Not Japan. So check this out. We're going to go ahead and give her a synopsis. What is Ima Sample's synopsis? Well, here is her. So let's be prepared. We're going to go ahead and use our gap system. So that should be standing. That should be right by you. All right. That should be right by you. So we should be looking at this screen right here. Oh, sorry, not that screen. This screen. What am I doing up here? All right, here we go. This screen. Okay. So we're going to go ahead and enter another client. But if we don't want to sit here and just, because we don't want to sit here and just make a bunch of these, what we can do, since this is the same, you know what? Nah, forget all that. I'll do this later. Let's just go ahead and let me see. We got 1, 2 for Grace, 2 for Erica, 2 for me. All right. We should now, after today, I ain't gonna lie. I don't want to add no more because I don't want to have to, go back in and
I don't think it's I think when we changed the name and changed the social, it still added it as a client because I edited it and it still added one on there, which was weird.
You sure about that, man? I don't know.
Because I didn't. We created a new one last time. I thought we edited it.
We edited it one, and I think we created.
We did. Okay, yeah, you're right.
So what we'll do after this, what we'll make a habit of is at the end of our sessions, we'll go ahead and we'll go and like do like a whole spring cleaning of whatever files we put up, so that we can kind of utilize some of those original samples over and over. Thanks for the heads up on that. But today it's all about I'm a sample, Georgia Peach, hallelujah. Let me go ahead and make sure that we can put her information in. I'm gonna give you her info and we'll go ahead and start the entry point right now. We can start from ground one. Here it is, everybody. Good luck. All right, so Alma and James, she is a married woman. All right, so it's Alma and James. And there are both of their socials. So let's go ahead and get their title pages done, guys. Let's go, their basic info pages in there. All right, and now we'll go right along with you on the basic info page. I will even allow us to look along with it. But I'll give y'all just a couple seconds here just to get everything entered. Let's get it quick. All right, let me know when you in there. Do you want us to enter a new? Now enter a new one. Go ahead and do a new one. This last one, that's fine. Enter a new one. We'll start editing previous ones. I don't want to go over 20 sample clients for our. I don't want to have to, deactivate a bunch of stuff for the year. Let's go ahead and use this as our first scenario, guys. All right. Couple things you'll notice. I'm a sample and James sample, married, filing. Oh, what should it be? What should the filing status be? Interesting. Yeah, let's get this in. I will go ahead and spoil it. I would say it's probably safer to just go ahead and do one of the marrieds. And you know that there's only two married categories, filing joint and filing separate. I would prefer to do married filing joint. Rarely will you see me opt for the separate. The best case scenarios for separate filings are when the two in the marriage, both spouses, do not have children, neither one of them. All right, not together, not individually. All right, those are the best times to file as married filing separate. Because if you file married filing separate and one of them has a child, they don't get the credit for the child, which is weird. That's just weird. I don't understand why they made that law that way. But if you have if you are a married woman and you file separately from your spouse, then you try to file your child and they won't give you credit for that child. Nor will they give you credit for your 1098. So oftentimes I notice it may be more advantageous to try to just go ahead and do them as joint. And then after that, see what it is that their living qualifications were. Did he live separate from the household for the last 6 months of the year because he was working on the road? And in that case, you may still be able to file her as head of household. It just depends. You got to ask questions. You got to probe. And then you got to put them in the notes too. That's a whole other thing. All right. So I'm going to go ahead and join you guys in the preparation field. Let's go ahead and see what we have thus far. So if you've been doing what I think you should have been doing, you're probably here. And you more than likely will have entered the correct information. Here's what I do. Sometimes I go down here to create new return, put in the social security number. The social we were given was 267-191919. And remember, I know, guys, they can't all be the same. So take liberties with the social. That's perfectly fine. It's not real. All right. And we'll go ahead and go back to this screen here. See what I've entered now. And it is now going to hopefully populate for me. All right. And I'm going to go ahead and put all that info in that we received from her. So it says married filing joint. Married filing joint. It's a little bit of a pain because you got to enter two people. But using the info I have, I see that it's Ima, all caps, Ima. First name, last name, sample, date of birth. I have it's on her driver's. Oh, it's on her driver's. Oh no, it's right there. 02-22 1954, as it says on here. I can leave this blank, or I can put in. I don't like using self because I think that just brags for more questions. I'm gonna put sales rep though for now because I don't know exactly what all info we're gonna use for her. Leave all of these alone. We're gonna put in the spouse's name, which is James. Damn, James Sample. He has his social security number here as well, which is again a fictitious number, and his date of birth is listed on here as well, just around my pop's date of birth. What's up, Pop? All right, we're gonna leave his alone. In fact, I'm gonna put him as retired. My man didn't work. He retired. School board. He was a bus driver or something. I don't know. And then we have the address, which is listed here as well. 123 Main Street. No apartment. It's a house. 3999, which ain't real, so it probably won't work. What's the Atlanta zip code? I can't think of none. Look at that. I just know Atlanta. And I have a phone number here for 678, which, I mean, if anybody is lost, let me just adjust this so you can see where I am real quick. We've got her phone number and all this other information listed right here. This is where I'm getting this from. So right now you'll see it says 678-321-9876. 321-9876. And there's a secondary number as well. 770, excuse me. 323-5678. All right. So this should be a pretty simple page to follow. If everybody did follow along correctly, then for Miss Sample, we're probably looking at this on our screens as of right now. We've put all of this in. All right. So we have a file for a married filing joint couple. We're going to go ahead and hit continue. And do they have any dependents? Well, let's check the records. Does she have any dependents? What does she provide for us on our intake sheet? Looks like, oh, there's two dependents. We got Yin and Yang, her grandkids. Yin and Yang, y'all. Brum, bum, bum. We got Yin and Yang for the grandkids. So for that, oh, do y'all see that? Yep. So for that, I'm going to go ahead and do what? We're going to go ahead and enter the kids' info. So for that, we're going to go ahead and hit yes, of course, as we know, and then it's going to ask us for the kids' info. So I'm going to put that back on the screen so y'all can go ahead and enter it. I will do it along with you. So let's get this done quickly, guys. Let's run it. All right, let's get this stuff in quickly. You got two kids, guys. Shouldn't take you but just a second. Should be quick. Snap your fingers. It should be done. This is basic data entry. Middle schoolers can do this stuff. All right, let me see. All right. And I'll leave that up there. Give me a sign in the private chat when you're ready. Let's get an idea how quickly we've grasped this. All right. Not a race, but test of durability. Well done. You'd expect nothing less. Good job. EH. All right. Pop. Get them on in there. All right. Get them on in there. Let me know when you. Okay. We got another one. Nope. Still waiting. Come on, y'all. Let's get that time up. These are the times that, this is, if it takes long to do this, then imagine trying to do this while taking phone calls, while having a client in front of you, while trying to keep the files together. So we got to make sure we can get this stuff in really easily. These two kids is twins, by the way, so they should have the same birthdays and a very similar social security number. Ooh. All right, one time. Good job, Jay. All right. Hey, there we go. Okay, cool. We're going to work on them times. A little slower than it needs to be, but hey, at least we know, so we can go ahead and work on it. Let's go ahead and get this up the screen, and I'm going to show y'all where I ended up. All right, probably in the same place as you guys did. So Here's where we are. We are now with I'm a sample. And if we just did this correctly, then we entered the dependents. The dependents now will be listed as yin and yang sample, as you see. We went through there. We added that they are U.S. citizens because we got their birth certificates, right? Or at least their social security cards or some form of ID to solidify that. We put the relationship as the grandson and as grandchild. And as always, like I said, we're going to use the number of months at 12 unless there's any real reason to indicate something otherwise. And that gives us our 2 grandchildren. Now let's get into the nitty. So let's go ahead and talk about the income for this young lady. She has a few different forms of income that she provided for us. The first one is going to be her 1099. Here is her 1099. I mean, here's a hold up. Here's a 1099 right here. I just uploaded this. That's wrong. All right, here it is. So for I'm a sample, the first thing we're going to have now, she's going to have not just the 1099. She's also going to have a couple other things as well. But let's start off with this, and I'm even going to give you guys some of the expenses that go along with this 1099. So let this upload real quick. There we go. Now, I will warn you, some of this is a little blurry and some of the letters look a little crazy, but at the same time, I still think that it's possible to include it. So here we go. The 1099 without further ado. Ta-da-da. There it is. Boom. All right, sorry about that. That first line says new technology company, and then it says 100 somewhere road. Forget about the suite. That's Los Angeles. All right, 41231. All right, and I put her information in. So let's go ahead and now put this information where though. All right, so this is an easy one for those that have done this before. Of course, we're going to put in income information. We're going to go to federal, and it's going to give us income. Now I'm looking at the different types of income. For this particular form, we can always look at what the form said. I done froze. We can always look at what the form says. It'll tell you exactly which form to use. Form 1099 NEC. Not to be confused, thank you, good job, Grace. Not to be confused with a Form 1099 miscellaneous. Remember, these used to look like this. They used to put the non-employee compensation there in box 7. See that? But no longer do they do that. Now they just put the non-employee compensation as its own form. So we're going to go ahead and use this as our template to add to this young lady's file. Where do I go to find that? Well, good thing you asked. We can go to the 1099 and what was it? NEC, right? It said 1099 NEC. So guess what? BM right there, 1099 NEC. Right here. I'm gonna go here. This is for the taxpayer, not the spouse. There's a TIN number, taxpayer identification number. We're gonna put 1, 2, 3, 4, 5, 6, 7, 8, 9. I don't think that's gonna work, but whatever. We'll put that in for now. All right. And remember, the name of the company is New Technology Company. New Technology Company. All right, I'm going to go ahead and enter the address, which again, these are fictitious. 100 somewhere over the Rainbow Road, just somewhere road. And then the zip code 3 is 90000. Again, made up. I can literally put in any number in there and it'll be, that's the funny part. Like, watch this real quick. So, you know how it auto populates your cities or whatever. So if you put in 9,000, nothing happens because it's not a real city. But any number after that, like if I put 1, it's gonna give me a city. If I put 2, it's gonna give me a city. If I put 3, it's gonna give me a city. If I go but the 0, it just doesn't work. So just a quick goofy piece of completely non-important information. So we also see on this the amount, which is fairly hefty. Okay. Now let's go ahead and put that in. All right, 5, 6, 7, 8, 9 is how much she earned from this new technology company. All right, no federal withholding, no nothing else. So I'm gonna go ahead and go over here. Now, unlike excuse me. So I'm gonna go ahead and put this right here. We should all be on the same page. All right. Well done. Good job, guys. So unlike though the W-2 and unlike the other forms, the 1099s, each of them, all of them have to be carried, because the 1099 can't exist on its own. It must flow to a schedule. The 1099 has to flow to a schedule, normally either a Schedule C or Schedule E. Not restricted to those, because there's also F for forms and all that other stuff. But in our realm, typically E and C is where you'll find those schedules flowing to. And in this particular instance, this is a 1099 non-employee compensation form, not a form that we saw before with the 1099 miscellaneous, where you see these different types of incomes, rents, royalties, other income. No, you don't see any of that. This is a 1099 non-employee compensation. So we're going to stick with the 1099 non-employee compensation, which means we're going to hit continue here. And then it's going to ask me, where do I want to flow this? All right. Where does it go? You guys have been doing this for a while. This is a 1099 non-employee compensation. Where does this flow? Look at y'all, Schedule C. That's absolutely right, the Schedule C. And what's the beauty about this Schedule C? This isn't a Schedule C that we manifest. This isn't a Schedule C that we ask for additional information. This is a Schedule C where they came to the table with legitimate, documented proof that they have independent income that is to be projected and transferred and flowed to a Schedule C, which also typically, if done appropriately, means that the person, the taxpayer, doesn't just have this form of a document to support it, but they received this from a company that also submitted this to the IRS. So there's ample proof that this income existed, not something that they made up because they're trying to get a better refund. You always want to aim to retrieve documented income in all cases, however that may be. The best forms come with the form number on it, such as W-2 or 1099. Sometimes it can be a QuickBooks statement that shows the overall income. Sometimes it could be the bank statement. Sometimes it could be your Cash App all added up, things of that sort. But documented proof is always going to be a much better option rather than estimated. I think I watched some cars. I think I made like 100 a week. All right. If you put that in, sure, you might get the refund. But if there's a question about it 2 or 3 years later, can you present any evidence to solidify your claims? If not, you could risk forfeiting the money that you paid to the client with interest accumulated since you originally received that money. So you want to be very cautious about that. In this case, we don't have to worry about that because we have a 1099 and we have the proof. So the next step was to go ahead and flow this to the appropriate spot. So where we decided to put it was the Schedule C BIM for business income. Now I want y'all to notice something real quick. She has a negative. Hey, what's up, sis? She has a negative $8,024. Now, before we just start putting in a bunch of numbers, just to kind of make this go away, before we just say, oh yeah, well, that's what happens, I want us to understand why she owes money. All right, let me go ahead and complete this and hit the transfer. I think it's actually going to go up the amount that she owes, as a matter of fact, if I'm not mistaken. All right, and here's another common misconception. All right, I want you to notice that we just flowed this to a Schedule C. Okay, and now this screen is asking for the taxpayer's business information, not to be confused with the 1099. You don't put the 1099's information here. Here's where you put the taxpayer's information. The 1099 has the 1099 information. Because I've noticed when I go back and look at some of the refunds and some of the taxpayers that have been prepared, some of y'all are putting in the 1099 here. The 1099 doesn't go here. What goes here is the business info. So if the client owns the business, then this is where the business name. If they don't own a business and this is going just to them personally, then this is where you put their personal information. Or as it says, if there's no separate name, then just leave it blank. The one thing you can't leave blank, however, is the type of business this is. And if you notice, she said the 1099 is from a technical company. This is where you have to ask your client, hey, what kind of business is it? What kind of work you did with them? Because just because it says technical company, don't mean that she wasn't necessarily a teacher, maybe an engineer, a janitor. She may not have necessarily done anything in tech. So what was your major function? Let's just assume in this particular instance that she did work in tech. All right, so we're going to look at the professional activity codes. We can put it in search, and one of these technical services, all our technical services, I'm going to go ahead and put that for now. All right, now I've yet to have that question, but sometimes what you put there in that field could kind of give an indication of what type of income it is. In other words, like if you put in that field, oh yeah, she's a notary, but then you put that she made $100,000, they're gonna be looking at you like, how much you charging for notary services? Because notaries normally charge like $5, $10, $15, $20. All right, and that's kind of questionable. So you want to be, at least accurate or at least credible when it comes to your submissions as pertaining to the field of which they work. Let's go ahead and get to the nitty. So now we have the income amount. We see it right here. But like I said, before we go into what it is that we should do next, because I think we all have an idea of what should happen next, I want us to talk about why she's in the negative. Because for some of us, some taxpayers may be saying to themselves, what do you mean I owe money? I've got 2 kids on my file. I earned $56,000. Why do I owe money to the IRS? I've got 2 kids. Make it make sense. Why do I owe money? Does anybody have a guess? Any guesses out there? Any educated guesses? Why do they owe money? Why should someone have to pay after having 2 kids on their file and also having income? They didn't pay taxes. Well said, Jan. Because this is not a I have kids refund. It's not a, but they really my kids and I bought a car and I bought a house refund. This is a tax refund. And on that 1099 that they submitted, that we have right here, look at box 4, federal income tax withheld. What does it say? It's blank because there were no monies allocated to the federal withholding, which means she didn't pay taxes throughout the year. If you're working with a company that gives you a W-2, they have taxes coming out your check. That means when they pay you $400, out of that, there's $40 that they also pay to the IRS on your behalf. At the end of the year, you have an opportunity to try to get that money back. If that money wasn't paid in advance, then you can't get that money back because it wasn't ever paid. Oh, I'm glad you came here to Walmart to get a refund, sir. But for what? Right? Now I want to go back and make one quick correction, because there's one thing that we may have omitted. All right, check this out. Remember when we did the kids? All right, so y'all let this happen. All right, I remember we did the kids, so I'm gonna show y'all this. I'm gonna show y'all that we said about the kids that they were born in 2000. They're born in the year 2000. So that means if you look at this the right way, if you go over here to dependents, then if we look down here, then we would probably, it's 2025. One of the reasons why they're not getting credit for their dependents is because they're over the age allotted for earned income credit. That cutoff age for earned income credit is 24. Some people think it's 18, but it's actually 18 unless you're a student. And being a student is one thing that I've noticed that the IRS doesn't mind you taking liberties with, because, you know, kids, they register for school, they don't go to school, they go in, they drop out. It doesn't specify like where they went to school, it's just where they in school, where they a student, you know, a full-time student. Let's say, did they finish? So sometimes liberties have been taken here, all right? Because they don't tend to hey, did they really go to school? Were they over 18? All right, they probably could use the money. But in this particular instance, even if I did put that they were over 18, it's not going to change anything. Why? Because of their age. If they were born in the year 2000 and the month of November, that would make them 25 as of right now. So here's what I'm going to do. Just for the sake of this, activity, I'm going to go ahead and modify those original dates. And I want you guys to go back and adjust those dates, the years rather. So instead of it being 2000, those kids are going to be born in 2008. Let's make that adjustment. I'll wait, guys. Go ahead and make that adjustment in your gap systems. Make the date born for these dependents 2008. Remember, this is all, and I will give you a heads up. Let's just assume that they are still students. All right. 2008, that would make them under 20. Probably still in high school. Full-time students in high school, that's perfectly fine. Okay. So let's go ahead and make that adjustment, guys. Give me a quick yes, yes, yes. Let me know. Give me the comments. Give me a thumbs up. Let me know when we're good to go. I need to see that y'all are working fast. Yay. Well done. Good job, y'all. Good job. All right. So as we see, like I said, we want to make this adjustment for these dependents. So Mrs. Ima's grandkids are no longer too old. Now, if we look back at it, look back at the screen, then we will see that the amount has changed. Did we notice that? The amount has changed. Why has the amount changed? Well, how do we go to tell that? Somebody tell me. Where do I go to tell what this refund or lack thereof is composed of? Where do I go? Yeah, that's right. 1040 summary print. Look at y'all learning. I'm going to go here. I'm going to go to 1040 view, page 2. And now what is this composed of? Well, so now we see all that makes up what they owe. So let's do the math real quick so we know exactly what's happening here. All right. So our client presented us with a 1099 that showed that they earned $56,789. Excuse me. All right. 56,000, and you'll also see that amount listed here on the page 1. All right. There was an adjustment to the amount down here, line 10. We see that. So they subtracted this adjustment amount automatically, which leaves their overall adjusted gross income right here. So right now, as it stands on line 11, we see that their taxable income is $52,777, but they're married filing joint. How much money do you recall? How much of a standard deduction does a married filing joint couple get? I'll give you a hint. That was a tough one because I know y'all just learned it. A married filing joint couple is on this page. Standard deduction of what? $31,500. Good job. Y'all are on point today. Lord have mercy. So notice, I'm gonna go to page 2. And here is where they're, here's where they're putting my standard deduction. I think it's, this should be the right number. Yeah, itemized. I don't have any itemizations. Yeah, it seems to be a little different than what. Oh, okay. Let me go back here real quick. Hold on. Oh, yeah, by the way, this 1099K, we got to talk about this 1099K because they're trying to mess y'all up with this. All right, so let's, just for the sake of just keeping this rolling and not stopping and looking at everything, I'm going back here and we'll notice that the 1099, the standard deduction amount that they have here is $34,700. which, if I'm not mistaken, let me do this math real quick, is going to be the allotted amount. Yeah, that's what I thought. Okay, so we're gonna just for the sake of argument right now, let's look at the auto related amounts. I'm not gonna tell you guys about each and every last one of these because then it gets a little confusing, but just know that this is where your deductions are as of right now without entering anything into our deductions amount. I saw that over here. We don't have any deductions listed yet other than the earned income credit, right? Which technically is more of a credit. So it's not nothing that we did, but we'll go ahead and take the computer's auto-populated amounts. But the more important thing is that with this standard deduction here, we know that this amount minus this amount, minus all of these, will leave us with this as our taxable income amount. And with this as our taxable income amount, being that they still, wow, is this really right? Is that right? That's how much they're being taxed. This is their total tax. So they end up owing this much. Yeah, that's crazy. So overall, this being how much it is that they earn taxable income wise, I'd be like, why is this? This is crazy. This is actually not what I was expecting for it to say. I'm being honest. All of the taxes, yes, we know that's the taxes to sell. Oh, okay, I get it. So yeah, so even with all of these being reduced, you see this is a major reduction right here. If you take this amount subtracted by this, then you're only left with like 20 something. And then from that, we notice that the standard deduction amount is over that. So it leaves this as the remainder of income after the standard deduction is remained. But this is the ugly part. That still doesn't have any bearing on the outcome because the earned income credit they get, just a tiny bit of earned income credit, it is applied to what they owe. So they actually owe $8,024. But since they did qualify for $2,455 of earned income credit, then they take this $2,455, subtract that from the $824, and that's how we end up with $5,569. It's probably not as easy to understand as I originally thought it would be to explain, but at least you see the numbers. Just say that much. All right. So at the end of the day, you just know why. The main reason ultimately why they end up owing this money is because there was no money paid into the taxes. The federal withholding does not exist. So all they have is a little bit of relief that they get as a result of having dependents. All right. I'm just going to show y'all something just to prove my point. If I go back and I say, you know what, for those dependents, those aren't actually my dependents. They stayed with me, but their mom is claiming them. When that happens, we go and we click not my child, not my dependent, not claiming for earned income credit purposes for both of them. They not really my kids. They my kids. And yeah, I took care of them, but they mom need to claim them because she going through something. So now we take away the claiming of the dependents, which will give me a completely different outcome. That outcome will resemble what we originally saw before we claimed any of the dependents, which was $8,200. That's without the earned income credit. Now, here's what we know. At this point, as a tax preparer, this is the part where you, as the tax preparer, are trying to devise a plan for this client. You're thinking, okay, I've got this client who has a 1099, they have two dependents, they have no federal withheld, but their refund is showing that it's in the negative. What can I legitimately do to assist this client? Well, the first thing that comes to my mind is we have a luxury when we have somebody who actually does have a 1099, because as I stated before, that is legitimate documented income. But the luxury of having a 1099 as opposed to a W-2 is that your income isn't fixed. It's dependent on all of the variables that are ensued. With the W-2, everything's spelled out for you. Notice on the W-2, they know how much you made, how much you paid in federal withholding, how much you had for federal Social Security wages, how much you had for your health insurance, your federal deferments, and all of that stuff for your for 401k. Not as much for a 1099. 1099, you got to provide that info on your own. And the first thing I think of when I have somebody with a 1099 is that means that you are an independent contractor. You're essentially a person who's working for the company, who's the sole proprietor. You are the only employee of your individual business if you have not made a company for yourself yet. And what does that mean? That means that whatever expenses, legitimate expenses that can be qualified, that helped you receive that income, can be listed in the expense area on your Schedule C. Now, me knowing that they have two dependents, now I'm going to go back. I'm going to go back and I'm going to claim the dependents this time. I just wanted you guys to see that the only reason that the amount was different was because of them claiming the dependents. But I'm going to go back and change that so that they are claiming the dependents in this particular case. And I know that this young lady more than likely had to spend some money to get this money. So now I get to ask her, ma'am, as an independent contractor, what expenses did you incur while working as an independent contractor in order to receive this overall income for the year? And this is where I get to check her handy dandy expense sheet that she did provide for us. All of us in the Castleberry and the land offices, at least with GAP, you all are familiar with what it is that we use. We use an expense sheet to submit just basic expenses such as phone, light, water, rents, mortgage, whatever stuff. And then we would utilize all the info they provided and take what is legitimately possible to be claimed. In this particular instance, Mrs. Ima Sample provided us with a list of expenses. I want to go over this with you guys real quick. Oops. I'm going to take y'all up screen. We don't have to keep doing it. So BM, this is some expenses that she listed. I'm going to save y'all the trouble of telling me where it is to put these because I think we already know. So I'm going to take these expenses and I want to plug them where? Into my handy dandy little Schedule C that I flowed all that income to, which is right here. All right. So now I get a chance to go to general expenses. And we want to go ahead and start putting these in the right places. But I want to show y'all something real quick. So all of the expenses that I list are not categorized. Some of them are, some of them aren't. They're not all categorized. So here's what I'd like to do. I'd like for us to go ahead and start entering these. But I'm going to go ahead and be a little forthright. I'm going to show you guys something. So notice that phone expenses is listed here, printer, and it also says supplies. But if you look at your average Schedule C form, then normally it doesn't say phone expenses. It'll just say either supplies, like it does down here, utilities. So your phone expenses, you got to decide where does this go? You don't have to always put phone expenses as phone expenses. I know that there's an other column, but you have the ability to go here and add, say, phone to utilities. So say I have that phone expense listed as I did here, where it shows that it is $4,800. I can put that down here. Let me show you what I'm talking about. So I'm going to go to the Schedule C page, and right here, even though it says utilities, I can actually put phone as a utility, or I can use it as office expense. All right, if it's a monthly expense. But right now I'm just going to count it as a utility. I'm going to put utilities. I'm going to click on the little bar over here on the side, which allows me to categorize it. And I'm going to put phone expenses, $4,800. And then that is going to put the phone expenses under the category of utilities. So I now have that listed here. In addition to this, we also had, printer. supplies, and other things of that sort. So check this out. I'm going to go back to the sheet. And instead of me putting these separately in other expenses, I'm now going to go to supplies. And even though one of them was called supplies at random, I'm going to go ahead and put that down here. And it did say $6,000 in supplies. But it also said printer, which is a supply as well. So I'm going to put the printer down there. And it even says computer. Now, we're assuming that we have the receipts and the proper information to solidify these claims. But if you notice, this is all one category that I have now put these under the supplies category, which they'll all be added and tabulated right here in this area. Now, one thing you're probably noticing, there's numbers that are changing as we're doing this. We no longer have that 57, that high number up here for the AGI, because every expense that I add reduces the adjusted gross income, also known as the AGI. And with every reduction of the adjusted gross income, I find myself getting closer. I'm going to go to, I'm not done with the expenses. I know I'm not done. I'm going to just do a quick check. I'm going to go over to 70 print, 1040 view. Now, and my income is lower. My taxable obligation is lower. You notice that I no longer have any taxable income, none at all, but I'm getting a refund. It looks like here. No, I'm not getting a refund. This is the earned income credit. The earned income credit right here is risen, but I still do owe $6,215. However, of that $6,215, I have $4,961 of earned income credit, which is subtracted from that, which makes my overall amount that I owe now just $1,254. But if you're a tax preparer like me, you know the limits, and you know that they have earned income credit, legitimate earned income credit. Not I made up, I got kids, but I didn't work all year, but I might have did some hair somewhere. But no, they have a 1099. All right, they have a way to prove if the IRS wants to mess with them about their income. No, here's the 1099 I got from my company. Here are the kids that I got with birth certificates and the school information that shows that they resided with me for the last 6 months of the last year. And I know that if I have two dependents, I have the potential to get that middle number. Now, I'm not going to get it just because I can, because I don't want them to deal with issues. I want to have enough substantial evidence to provide the IRS with the fact that the information that I'm providing for them did indeed get implemented legitimately and resulted in the outcome as a result of all of the information I received from the client, which I'm going to include in the notes at the end of this as well. But we're not done. We're not done. Even though we have this now showing us that we're moving in the right direction, we still have some expenses to add. So here we are now. I've already put in the phone, printer, the supplies, computer. What I haven't put in is the business license, the rent, and the advertisement, and the insurance. So let's go ahead and put that stuff in real quick, guys. Let's go ahead and go back to, I'm going to go back to the other page. Let's go back to the Schedule C that we were in. Okay. And pow, I'm going in general expenses now, just in case somebody did miss how to get that. I'm going to go back to how we get there. Say I've started at basic information. I want to go to my Schedule C, federal section, Schedule C, and edit. Whenever you see that little pencil in the box, that's the edit button in general expenses. Okay, so there's a few on here that I haven't put in here yet. It's going to refresh your memory. And I'm going to put this up on the screen so that we can enter them as well. So check it out, guys. Here are our expenses. Let's go ahead and add them all and see if we end up with the same results. Here you go. Without further ado. Let's go ahead and enter everything we've got on our sheet as quickly as possible. I will join you at the end. Let me know in the private chat once you've got everything entered. Okay, all right. Well done. I added some of y'all skipped ahead a little bit. There you go. Mm-hmm. All right, good job, y'all. Get it up, get it up. Tick, 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 tick. Tick, 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 tick. Good job. All right, fantastic, fantastic. All right, let's see where we ended up. Let me put mine in too, actually. Just sitting here messing with y'all. I didn't even do it myself. It shouldn't take us so long. Taxes license. All right, and advertisement. Yeah, try to make it as easy as possible. And of course, insurance. All right, I wonder if we got the same results. All right, let's see. Did we get the same result? How we looking? Same thing? We should have gotten, it looks like about 40/70. Yeah? Good? Yes. All right, everybody else? Yes. Same? Well done. Well done. Good job. All right. So this can be the easy part or the hard part, depending on your client's outlook. And this is why I said on day one that we're not just in the business of doing taxes, we're in the business of marketing. But in addition to marketing, we're also in the business of setting expectations. You might have had a client who walked into your office saying, I've just had the best year of my life in terms of income. I made almost $60,000. I got 2 kids. I need my $10,000, Frankie. And you might have to be the one to sit her down and be like, ma'am, there's nothing more that I want to do than provide you with $10,000. Let's see what we can do. And then if you can explain all this to them, I will say this, and this tactic. I mean, I'm not gonna say that this is something I pride myself in, but it's the truth. You do have to smack them down to reality every now and then. And an easy way to do that would be to show them that screen when it said, "Oh, it looks like you owe $8,000." Now you do run the risk of them getting freaked out and being like, "Oh, can I have my papers, please?" But no, just this is where we're starting, because remember, we have 3 things that we're going to do for the client today, right? There's 3 things we're going to do for them today. All right, 3 things we're going to do. All I did just now was the first, ma'am. I just entered your info into the system and told you, step 2, the number that the system's giving me. Now I just got to go back and to the system to see what credits, what forms, what we could apply to our file that will allow us to legally maximize the refund. That's why I needed your additional information. Remember, she may not have come in with her rent, phone, all of that. We've gotten that from her, okay? But now it's allowed us to get her refund to an amount that is a little bit more palatable, which is at about $4,000. Of course, there's no fees coming out of that yet, but let's gauge what that $40,000 is made of. And how do we do that? We go to our handy dandy summary print page. We're going to go over to the summary print, page 2, and it looks like the full amount of earned income credit as a result of all of the information we provided for her, she provided for us, has been awarded to her. The full amount of earned income credit. Unfortunately, she did have $3,082 in taxes owed, but she actually got a refund of $7,152. You take this $7,152, subtract it from $3,082, and you end up with $4,070, which is her refund. And that's for 2 kids. If you want to gauge what it'll look like with just 1 kid, just take one of the kids off or put them as a not claimed for dependency or for earned income credit. But this is where you have to do a little bit of sales sometimes with some clients, because she is going to be comparing this with her daughter, who only worked at the hair salon for 2 months and is claiming her 3 kids and is getting back $10,000. And she doesn't understand why. Like, my daughter didn't even work that hard. I worked all year long. And you got to understand that, well, your daughter got a W-2. She paid into the system. Plus, the amount of income she earned was a lot closer to the exact amount necessary to get the full amount of earned income credit. Plus, she's claiming more kids. There's so many different variables. If you can't explain it, then they might not want to speak with you. and they'll go to somewhere where they can get it explained, which might just be the internet. Your tax expertise is what gives the trust factor a better sense of credibility. All right. So yeah, it's $4,000. Now, this is before she's even been charged. But this is also why it's so important, in my opinion, guys, is why I always say, if you notice on our client intake sheets, this is why I always say, if it's a new client, we have no idea what they got the year before, it's best if we get them to fill out that part where it says, did you file last year? If so, what was the outcome? How much did you get? Because if I'm a sample says, well, yeah, I filed last year, but I owed, and I've owed the last 10 years, then we know we don't have too much convincing to do to her to show her that this is a better outcome than what she's been getting before. But if she says that I've been getting $8,000-$9,000 for the last 10 years, then we got some explaining to do. And that is where you should rest your laurels. How you communicate to them and convey to them whether or not this is going to be the most advantageous for them, it depends on what they're expecting. So you got to manage those expectations. But in this particular instance, I think we fared well. It would behoove you. This is why when I was working with B in the office, this is why we used to write down the number that they originally had, which was $8,000 that she owed, and keep it right there in front of them. So right there at the end of it, when we have them getting back, more than likely about $3,000, because we got to get our cut, right? Over $3,000. It ain't gonna be 900, it's gonna be 1,000, but there's additional fees that go into that software, bank, all that other stuff. But in terms of even tax prep fee, it's probably gonna be somewhere between 5, 6, something like that. She's gonna end up with 3,000 plus. But we want to make sure we remind her that this is money that's going into your account, as opposed to this original number that you owed, which was around $8,000. So I'd say that we did well this year, and this is also where you can start coaching about next year. But I'm not even satisfied with this, Miss Smile, Miss Sample. This is cute. This is cool. But I think we can do a little better than this. One way we can do better is by having some income withheld. Another way is not having 100% self-employment income. Okay? So we start telling them why this is a good one. We have to set the expectations. All right. You started off with 8,000. Now we're getting you back over 3,000. And if you want to get more, which I want to get you more, here's how we can do that for next year. Let's start that process right now. And so hopefully at the end of this process, your client's happy. Now, after this, of course, you have the rest of the tax preparation information that you guys already know how to do. You're tax preparers, you're good at data entry. So I don't have to sit here and school you on how to now go to the end of the page and start getting things ready. So let's just assume this is the final step. We're done. She's satisfied. She wants whatever this is. It don't matter as long as she ain't got to pay. She wanted them as long as they ain't got to pay type people. So I'm going to go ahead and go here. Let's just assume that she did have health insurance, that they had no health insurance information. They don't got nothing through the marketplace, none of that stuff, which you all know how to do. State return, okay, they're not even allowing us to do those yet. So now we go here, we just keep hitting continue till we get to the very end. And I'm not going to sit here and bore y'all through this part. You're all very familiar with, well, actually, we should go through this. This is good. I'm going to go through this with y'all real quick because these questions, we have learned to see them in a monotonous fashion so that we just like click, get through them. But what we're also doing is we are stating that we're basically saying it under oath. I did ask these questions and that I do know these things about these clients. Let's just go through them very, very, very briefly, because this has to be done for anybody that gets earned income credit. So was a taxpayer a non-resident alien? Nah, they a U.S. citizen all year. Were they a qualifying child of another person? Nah, she's a grown woman. She ain't no child. She ain't no, nah. All right. Did you complete the return based on tax info provided by yeah. She gave me W-2. It wasn't, she didn't, it was crazy. But normally it's no, yes. But let's go why. Did you interview the taxpayer, asking questions, and document the taxpayer's responses to determine the taxpayer is eligible to claim? This is them setting you up for a due diligence review. Did you do these things? You're saying yes. Did you review the adequate information to make sure that this is why it's important to just have documentation in addition to what you're claiming? Because clients will come in and be like, yeah, I made $6,000. Okay, nope. IRS is like, how you know they made $6,000? Well, I asked them, well, did they have any proof? That's why I be like bank statements. All right. In the event we do ask for these infos or Cash App, whatever, documented proof always is better to have that. All right. And does anything pretty be inconsistent? Well, no. Obviously, if it did, we probably wouldn't want to use it, right? That's the trap. All right. Did they meet the requirements? Yes. Did you keep all that info? Do you have the W-2 on file? Do you have the notes on file? Do you have the birth certificate, the driver's license? Do you have the social security information? The proof that the child did indeed reside with the client for that half a year? If you could present that, which are hard documents to present. Yes. Which of those did you present? Well, in this particular instance, she gave us a 1099 NEC. We got birth certificates, social security cards. She got a driver's license. Those are things that she provided for us. All right. Did she provide documentation to substantiate the eligibility? This is right here where they're saying, all right, how we know that them her kids? How we know they stayed with them? And this is where you say, yeah, I believe it. And here's what she provided. They brought something in there. Did they have any issues with taxes in the last few years? Did you ask them? Yes, I asked. I sure did. Were any of these disallowed? I hope not. I typically assume that it's not. And did you ask enough questions? Yeah, I know that it's a Schedule C. Yeah, I asked enough questions. I didn't even have to ask a question. She presented me with a 1099. 1099 automatically flows to a 1099 to a Schedule C unless it's a 1099 miscellaneous that has royalties, rents, other income, things like that. This is what miscellaneous. This was a non-employee compensation. Automatically gets a Schedule C. Okay, are the children intended to be or qualifying children on other tax returns? Not as far as we know. All right. And have you determined that the taxpayer is eligible to claim the kids? Well, yeah, if they presented us with the kids' ID, they've given us a good idea that the kids did indeed reside with them, especially if they're able to present with us some sort of indication that the child did live at their residence, which would be any form, hospital document, school document, a form that will show the client, the taxpayer's address, as well as the child's name. Then that pretty much solidifies it. Sometimes emergency contact information, but I really think that it'd be nice if there was an actual form that folks could fill out that gets rid of this, because there's no definite form. Like in terms of income, they're like, okay, show us the W-2. All right, show us the 1099. But in terms of like how you know that they're eligible to be claimed, it's like, oh, there could be an array of things. It could be, the school form, the immunization forms. But everybody doesn't have all that stuff, you know? So I think it's kind of weird, but I'm not going to sit here and tell on my soapbox. Just know that this is what they're asking for. Did you explain to the taxpayer that she may not claim EIC if the taxpayer has not lived with the child for over half the year, even if the taxpayer has supported the child? All right. This is when it gets tricky. This is when you get the father saying, look, man, me and my baby mom, we alternate every other year. Now, even though those can be court orders sometimes, I'm here to tell you by way of experience that the IRS, despite the court saying, yes, you're allowed to have you're allowed to claim your son this year, Mr. Smith, but next year, Mr. Smith, it's okay. You guys are going to alternate. The IRS doesn't care. They don't care if a judge awarded somebody the ability to claim a child, if it's in the divorce papers or whatever. At the end of the day, if you say, yeah, I claim my child, and the court said I could, but then you say, but the child don't stay nowhere near me, the IRS is like, I don't care what the court says. IRS is like, I don't. Did the child stay with you? No. All right. No. Here's one thing that is new. In 2025, the administration did give some liberties to the dependent's father who doesn't get to claim them because of child support. There is a little bit of leeway there, but it doesn't mean that the mother and the father can both claim the dependent. It just means that if the mother is willing to allow the child to be claimed by the father, if the child is being paid child support, then they're not going to contest that as often as they used to. So we'll go ahead and put this down here as yes. And did you explain the rules of the EIC? There's more than one parent. There's no tiebreaker rules. There's one or the other. Just think about it like that. All right. Answers. Did you certify that all these are true? This is you saying yes, I do. I'm saying my hand on the Bible, BM. If you answer this question, then this one's important. This is a grandchild situation. So they're asking, why did you put this on the parents, on the grandparents instead of the parents? Why the parents ain't claiming these kids? And you need to explain that. Otherwise, they could ask by way of a audit. Here's something else that's uncomfortable. We got to fill out notes. All right. And I tend to put them in the EIC due diligence note. This is where we give this client story. This is what I would say in this particular instance. Taxpayer, if I don't want to be too personal, or I could say Mrs. Sample, or the Sample family. But typically, I just like to be brief, general. So I'll just be like, taxpayers, because they're a married couple, provided 1099 non-employee compensation form to support their income. Taxpayer. Remember, there's a taxpayer, then there's a secondary taxpayer. That's the spouse of the taxpayer. The primary taxpayer is the one whose name appears at the top. Okay. Taxpayer works as a sales rep. She resided with her 2 grandsons in 2015, 2025. They lived together all 12 months in 2025. Now these things can be paraphrased. You don't have to write exactly what I'm writing. She provided birth certificates and Social Security documents to support the claims, their identity and relationship to the taxpayer. Now, this one's kind of important. So, if you notice, I just said they provided birth certificates. Now, birth certificates don't automatically mean that you can claim a dependent. All right. The birth certificate's purpose is to show you that the dependent is what you said the dependent was. So if I bring in a birth certificate for the grandchildren, what does the birth certificate for the grandchildren really prove? It proves that they're the kids of somebody. But how do I know that those kids of that somebody are my kids' kids? So when you have dependents that are not son or daughter, oftentimes more than one birth certificate is necessary. Okay? And some clients hate hearing that, but it's the truth. Just because you got a birth certificate, that shows that the child was born. That don't mean that it's your child. You know what I'm saying? Like, we get it. But on these 2 birth certificates, it's going to show that yin and yang were both the children of somebody. What I have to do is connect the dots between that somebody and the taxpayer. So in this particular instance, what's going to help me the most is going to be 3 birth certificates. 3. 1 for one twin's birth certificate, 2 as the other twin's birth certificate, and then 3 the mother's birth certificate that shows that those 2 kids are born of my daughter. And the birth certificates prove to you that they belong to my daughter. This other birth certificate proves that the mother of those 2 kids is my child. So you see by this string of birth certificates that they are who I said they were. Okay? It's not just, oh, they got a birth certificate. Yeah, okay, we get it. They were born. Who are they? Prove it to me. IRS could care less about your story. Okay? So in this particular instance, you got to have more than just one birth certificate. If it is not the son or daughter or parent of the taxpayer, more than one birth certificate are necessary. You want to get in the habit of collecting those. Uncomfortable, yes, but here's what we take pride in telling the client, listen, yeah, it might be hard to find that, but once you find it, don't worry, you'll never lose it because we'll have it on file for you and you won't have to give it to us again. Once we have it on file, we don't need it every year. Okay? So let us be your birth certificate catalog. We'll keep it on file. If you lose it, we got it. And you ain't got to show it to us that damn more times. But if the IRS ever asks, that's really your grandchild, you ain't got to do nothing but tell us that they sent you a letter, and guess what? We got it on file. All right? Better to take those precautions. So encouraging, B. Thank you so much. All right. So keep that in mind. Let's go ahead and go back to our notes. Let's get this filled out because I hope to get through one more module before we get done here. Okay. So in addition to this, we also now, what are some of the things that one of the objectives of having this as a having this notes column is to answer the questions the IRS are going to ask before they ask them. You know what's questionable in this file. You know what's interesting. Talk about it if need be. Keep them from asking questions by way of a letter through these notes. All right. So what is it? All right. The children, the dependents. Okay. The dependents resided with grandparents. And this is where it gets uncomfortable. And here's what I do. I don't say, why your kids wasn't crying about it? I say, if the IRS was to ask you why the parents aren't claiming the dependents, what would your answer be? And that's what they'll normally say. Oh, well, she don't really work, or she don't even live with me, or she ran away with some man. That's where you can include that information. In this particular instance, I'm just going to assume that the mother is not working right now. The mother is not working. Okay. Resided with the grandparents under their care with permission from the mother of the dependents due to the mother having difficulty landing steady employment for the time being. This is just one that could be an option. Doesn't necessarily mean that that's normally always going to be the case. Okay. All right. Taxpayer provided. This is where I can list some of the things provided. Bank statements, as we typically are in the habit of collecting, right? Bank statements to support expenses listed. As an independent contractor, she was responsible for providing her own resources Let's see, what else can be answered in this? Oh yeah, there's no government assistance, received no government assistance. The government assistance thing that comes into play because now they're asking, the IRS will be wondering, how is a family of 4, which is what this is, 2 grandkids and 2 grandparents, able to survive off of $20,000? And that's where you fill in this. If they have low income, then one of the questions is, how can they live off of this money? They can live for $20,000. After all of the expenses, you can live for $20,000 for the whole year for all 5 of y'all. And this way you can answer the question. Well, yeah, like the father gets pension, the father gets whatever Social Security, but or there's sometimes it could be in addition to the income she earned, the family also receives financial assistance from the VFW and their grandkids, or something of that sort, to give them an idea as to why the income may be sufficient, or if there's more that they are unaware of. Now, I probably wouldn't want to put that. Due diligence. What did I miss? To not qualify. Yeah. Did it say I didn't qualify? Due diligence for earned income credit. What you talking about? What you talking about? No. Yes. No. Yes. You satisfied? Yes. No. Yes. This is no. Yeah. Yes. You certified? Yes. Oh, I don't even think that's right. It does meet the requirements. We do have earned income credit, so we're going to assume that is a bug. All right. Oh, okay. I thought it had deleted my notes. Where are they going? EIC, I'm about to be mad. All right, so now we got to put in those notes. And don't worry, for my folks in my office, we do have a template that gives you a list of questions to ask. I just want you to know why they're asked and what the good news of it, what to look for when you ask these questions. And then you get into this part, which we'll get into a little later. I just wanted you all to know how to actually close this off. So that's why, so that's how we end up where we end up. I'm going to go ahead and go back to the basic page. And this is our result. So for I'm a sample who got these 2 grandkids, yin and yang, all right, we were able to get her a refund of about $4,000 minus expenses. And that is way more than the $8,000. One of the kids should put yes instead of no. I did. Oh, I did. Hold on, let me do this. Wait a minute. I put yes instead of no. What you talking about? Let me go back over here. No, no, yes, yes. Oh, yes. Did you ask? Yes, yes. Nah, I still got them at both as no. No. I don't know what they're doing. I did it right. I don't know what y'all talking about. On the questions, what questions, Erica? What you talking about?
On the due diligence questions, one of the questions asked, do you, is that kid claim on any other file? You put yes on one of them and no on the other.
I did. I was testing you. Ha ha ha.
I knew it.
Hold on. Let me see if I got it. All right. So you saying that in the
scroll.
All right. What did I do?
Going. Mm-hmm. Right, those questions. See, you put no now. It was yes.
I feel like I had a yes, but we'll just do this. No, and no, just to be sure. And yeah, it's still. I think it's still saying that crazy stuff. It's weird. So I think this is just a bug, but thanks. At least we looking out. I'm gonna go ahead and get back to it, and let's start. I'm gonna do this last little part here, okay, guys? So now you all should at least have an idea, not only as to what it is to do when you're presented with somebody with a 1099 of this sort, how to flow it to the proper schedule, and how to inquire about those additional expenses that they could indeed use, in addition to how to take best advantage of and to properly maintain the records that solidify the claims of the dependents that are involved on this file. All right. So that is what this is all about. I hope that makes sense. I want to take this a step further and just go even deeper into the weeds for this particular file. So now, just to make sure we're all on the same page, we all should have, as it stands, this for our results for this particular file. $4,070 for the outcome, with $20,000 to $20,273 for the overall AGI. 2 dependents, both of the age under 20, because their birth dates were in 2008 instead of 2000 as we originally projected, with the notes, the 1099, the expenses, all of those things included. What I want to do now is I want to show you guys what happens when you start to mix in additional 1099s. Let's do another basic 1099. Now we're going to go ahead and talk about James, because these are James's incomes. All right. So I told y'all that we had I'm a sample where she got a husband. She got a husband named James, and James gets Social Security. That's going to change things. That's going to change things. Yes. Thank you. That's exactly right. Keep them from asking questions. You don't want them asking questions. The more questions you answer, the less they ask. Doesn't mean that you'll be absolved, but you want it to at least show in your best interest. Now, I want to show you guys what I want us to enter these collectively. But remember, the numbers you're going to see on here in terms of the year and the names that you're going to see are not accurate, but we're going to use them just for the sake of entry in this particular module. Okay, these are not accurate, but I'm going to show y'all anyway. This we're going to use as Mr. Sample's income. All right, so if you all recall, we are dealing with a married filing joint couple. All right, we've got Mrs. I'm a Sample, all right, who works as a sales rep. And then we got James Sample, who's retired. And I just showed you guys that James, even though he retired, he still get income now. James is going to get this for Social Security. And that typically looks something like this. Oops, sorry. Sorry about that. So we're going to go ahead and box one. Let's assume that that is for James Sample. So where am I going to look to fill out the Social Security information for James? All right. First of all, I can't do nothing. If you want to click something over here, if you're on the personal information page, it ain't gonna do nothing but give you an error message like this. All right. So when every time you're on a personal information page, don't try clicking one of these. You got to click one of these. Cancel or continue. We'll go ahead and continue. And now, what? Pop quiz. SSA. Good job. That's right. Thank you. SSA, which stands for Social Security Administration. If I want to find this form, for those who don't know how to find forms off rip, well, first of all, the two easy ways is to say, what kind of form is this? This is an income form. It's an income form. So when I'm looking at an income form, I can just go down to federal and go to income. And it's going to give me all the different types of options. But if you want to do it a little quicker, for those that may just like to type in and see the results, then you go here. And what does the form say? It's called a what? A 1099 SSA. So I'm going to go to Form Finder and put in SSA 1099. And guess what? A list of options normally comes up. There we go. 1099 SSA. Scroll down. Social Security. Bam. So, which one is the primary taxpayer? The husband or the wife in this particular instance? Which one is the primary? Which one's the secondary? Who's the primary? Primary is the wife. That's exactly right. How do we know? Because her name is listed here. All right. The person whose name is first is the primary. The first name is the primary. Okay. The first one is the primary. The second one is the secondary. And normally I tend to use the primary as the one who communicates with us. All right. Either that, or if they're both communicating with you at the same time, it might be the one whose income is the highest. It doesn't really matter at the end of the day, but normally I like to use the primary as the point of contact. Okay. So let's go ahead and go back to, we were looking at the 1099 SSA, and down here it shows us that we have retirement, which is insurance. Excuse me, this SSA. Now don't confuse it with RRB SSA. We're looking for the 1099 SSA specifically. 1099 SSA. Social Security, because that's what the form is. It says Social Security. So I'm going to go ahead and click this. So since this is for the husband is the secondary. Do I put the information here? No, because this is for the primary. So this is for the husband. I'm looking for the secondary. I'm going to scroll down to the secondary, the spouse's info, because the spouse is not the one listed here. James is not listed here. So I have this. Here's my income amount, which says, for those that are having difficulty seeing it, it's for $19,082. 9082. So I'll put that number right here. There's also another one in box 6 for federal taxes withheld. Check it out. Is there anything listed there in that box? Nope. It says none. So we're going to leave that thing blank. And that is it. So guess what? I am now going to add this. And I'm just curious, what kind of impact you think this will have on the file? Is this going to make the refund change? Is it going to go up? Is it going to go down? Oh, wow. Look at this. We have contention amongst the answers. We got somebody says none. Somebody says it might decrease it. Somebody says none. Interesting. I think that you're thinking because that the income is non-taxable, that it shouldn't have any impact. And you would be right. It's non-taxable. Okay, that means if we go over here to the summary print, all right, and then we look over here at our handy dandy payout amounts, then we notice that no taxable income has been added. There's still no taxable income, so the amounts stay the same. Now here's the sad part. I'm just going to point this part out. Because Social Security is not taxable. Oh yeah. Do we have premiums? You're right. Good job. Well done, Jen. She's right. So Jen mentioned that we have to include the premiums as well, and that is 100% correct. So what does that mean? Let's go back to our income, to the sheet, which is our Social Security benefits. And I want you to notice right here on our Social Security, you see in the box, not the pink one, but description of amount of box 3, which is the totality of all of these income amounts. You notice that it says Medicare premiums deducted from your benefit right there on that second line. And it gives us an amount of, I believe, $938, right? So when we remove that, we look right here on that sheet where it says all of this. And guess what? We did not include that. The premium should be added right here. Sir. And actually, I normally prefer for it to be, this is a little new. It doesn't normally do it like this on the other Jones, but whatever. The Medicare premium, we have it right here. And it states on the sheet, Medicare premiums deducted. So I'm just going to put, it doesn't give us a specific type. I'm just going to put premiums. And the amount, $938. And that is what it says right there. Medicare premiums deducted. And now I have the premium amount into there as well. Now, fortunately, this should not have any bearing on the refund or anything like that, because remember, this is all non-taxable income anyway. But now we have both of their income information entered, at least. And you might be saying, oh man, but it didn't help. Yes, it did. Why did it help? Because you did not erroneously underreport their income information. So now the IRS can't hit you with a letter next year saying, oh yeah, by the way, you forgot to include this and we did it our way. So here's how much you owe us now. Accuracy is your best friend. Accuracy keeps the IRS away. And if it's not accurate, then at least it should be, at bare minimum, some sort of documentation to solidify why you came to the conclusion you did. Okay? So we know that. All right, I want to keep this going, man. I like this module, and we're coming down to the last few minutes here anyway. So we're gonna keep on going with our good handy dandy homegirl, Miss Ima Sample, who's been doing us good this far, man. Thank you so much, Miss Ima Sample. Like, you showing us what's happening, man, and we just appreciate you being willing to submit your personal information and all that. And it's helpful. It's helpful. But let's go ahead and keep this thing going just a little bit further. All right. We've already, as of now, entered her 1099. We've entered her husband's 1099 SSA. Now I want to do something just a little bit different here. And we're going to go ahead and enter what her husband didn't tell us before, that he had a 1099R. A 1099R typically refers to retirement income or pension or 401k or income that's paid out in an annuity form or settlements, payments, things of that sort. An overall gross entity that was paid out to you and proof therein from the company that gave it to you, whatever that may be. As a retired gentleman, I'm assuming that Mr. James Sample could very easily have some retirement income. So I'm going to go ahead and put this on the screen right now. I want to remind you, these numbers are not accurate. The names are not accurate, but we're going to use the template in this just for the sake of entry. Okay. So we now have this overall for now. Forget the 2019, forget the Joe teacher, forget the anywhere, any the 1, 2, 3, 4, anything street. We're just worried about boxes 1 through 13. Okay. Boxes 1 through 13. Now let's just go ahead and enter this just for the sake of entering it. But before I even enter it, I'm just curious. Just at first glance, do y'all have an idea of what this is going to do to the client's refund? Quick guess. Yeah, thank you, chat. It's going to drop. Drop. Decrease. Drop. Eliminate. Why is that? Why? While you're thinking, I'll tell you the answer. It's because we are about to add 20,000 plus of taxable income to the file. All right, let's look at where we are before we enter this 1099-R. All right, which we go to our 1040 sheet. Before we look at this, before we add this, look at our taxable income. Our taxable income is at 0. 0. Because of the deductions, because of the expenses, because of all of those different things. But now we're going to go ahead and add a 1099-R to this file, which before this had 0 taxable income. So if I want to add a 1099-R, my folks would tell you that you could easily just put in 1099 excuse me, R right here. But then it's which one? All right, well, let's look at the paper. The paper says that it's a 10. Oh, where'd my 1099-R go? There you are. Our 1099-R looks like this. All right. And as you see at the top right-hand corner, distributions from pensions, annuities, retirement, profit sharing funds, IRA, insurance contracts, etc. And you'll notice that that's also an option here. The very first one, we're going to click on that one. All right. This is for not the primary, but the secondary taxpayer. Taxpayer's ID. This is the payer's information. So shouldn't that have auto-populated? Oh, the payer, excuse me. That's the it should be at the top left, but it's blank. Yeah, so we're just gonna go ahead and put in just a fictitious number. I'm gonna put in 21 and then 986765543, whatever. All right, and hope that that's okay. It also gives us California State Teachers Retirement. All right, address we see PO Box 15. Y'all should be putting this stuff in too, so we get the same results when we're done. And the California zip code, which actually is correct this time. So you should put this here. I'm gonna go ahead and put this up, and y'all just go ahead and put in everything that it says, and then I'll meet you back on the other side in just a moment here, okay? Some interesting things going on here. Let me know when you're done. Good. Everybody done. Yes, the taxable amount is different. That's right. Okay, now everybody done. All right, 2 is done. Come on, snap it up. Yeah, there's no payer's ID. I just made it up. Like I said, if you notice on mine, I just put in 2-1. Why 2-1? Because if I did 1-2, it might say it's wrong. So I put in 2-1 and then just 9-6 and just count it down from 9. As long as we can get this stuff entered, okay? All right, I'm going to go ahead and move forward. We should all have something that looks similar to this. Good job. Let's get it quick. Let's get it quick. All right. So let's go ahead and hit together collectively the continue. And you notice that, yes, it says the taxable amount income is less, and that's fine. I'll even show you why. The taxable amount that's missing here is this. All right, so they subtracted. They said that out of the gross distribution that they paid to this person and the pension over the year, 276 of that was employee contributions or insurance premiums. So it's not taxable. They consider that about not taxable in this particular case. So that's why that's the case. Let's go ahead and move forward. So yes, we'll just go ahead and say, yeah, we know. All right, cool. Did you make? Nah, we didn't do that this time. Although I will show you that this is applicable in times. But for right now, just for the sake of getting this done, let's say no. And now we have this. And what we expect for to happen over here, I can tell you, it's probably going to go all the way to negative. Despite having 2 kids over here. Maybe a little bit. Maybe it'll still keep a little bit. Because there is some federal withholding on this form. So yeah, you'll notice right here that there's federal withholding of $1,164. But that's still a lot of taxable income. So I would expect it to drop significantly. Yeah. That thing went from $4,000, bro, to $221. And frankly, they lucky that it came up positive. The only reason it came up positive is because of federal withholding. Let's go ahead and let's search as to why it did this. Let's go to our summary print. Let's look at what our refund is composed of. Summary print, 1040 view, page 2, and our payout section, BM. So we now, instead of the 0 taxable income, we now have $3,655 of taxable income. All right, $3,655 of taxable income. We added $20,000 up here, which you'll see on our first page of the 1040. We added $20,000 in the pensions and annuities section. And all of that information is here and it's included. Okay, there it is. All right, so all of those things minus the standard deductions, minus the expenses, all those keeping in mind. Now we have this amount as the taxable income. Take them out, that's taxed, subtract that from that, and then you end up with this. Subtract these two, end up with these. So this is how much they actually were taxed. But they have this in federal withholding, which they are awarded 100% of. And they have this amount of earned income credit, which is much less than it was before. Why? Because they're now disqualified for the bulk of it due to having more earned income. Because despite it being retirement, that taxable income is still considered earned income. And it's taxed. So now you have those two numbers, you add those two together. These two numbers together are going to give you $3,303. You take that, subtract it from the 3,030 and 82, and it ends up with $222. So their total amount of payments that they should be awarded minus how much they're being taxed gives them a refund. And if they didn't have this 1164, it would be a negative amount, which means they would owe money. So most of this is just to show you what the refund or lack thereof is compiled of. How did we come up with these numbers? Okay. And so that's what happens with, now here's the funny thing. In years where they may be able to prove that they had some sort of difficulty, perhaps with a hurricane or something of that sort, this retirement income, this part right here, this taxable income can be adjusted in certain select circumstances, depending on what fared. Like you see, when you do click this button, sometimes you go to the next one, it'll say, hey, was this because of a qualified disaster? Was there a disaster? Did they qualify for it? Were they in the path of that hurricane? Were they in an earthquake? Did they have a tornado that was a federal disaster within their area? We'll go into that a little bit later, but using those informations, as long as the information is accurate and you can present documentation to support it, most times is the better way, then you can sometimes alleviate that taxable income amount. I'm just going to put 22,000 because I know what it is. I know it's less than that. Federal disaster amount. I don't know if this is an actual federal disaster as of yet, but I know in 2024 there was Hurricane Oh, I forget the hurricane's name, but she was a mother. She was a hurricane. All right. So just in this is not real. All right. So don't do this. But just in case there was some sort of hurricane or some sort of natural disaster that happened, you'd have to look up the actual dates that all this is applicable for. I'm just showing you how it's possible. And if indeed those did, okay, now I always do that to cheat, because when you do it, it'll actually correct you and say, hold on, it can't be greater than this. So you go back and be like, all right, well, how much is this? This much. Okay, cool. And if I'm able to qualify it based on actual facts and that they were in the line of it, they were definitely impacted by it and can support evidence with it, then I might be able to alleviate that federal taxable income that they had on their 1099 if it was withdrawn as a result of some sort of federal disaster. Not just a pension, but withdrawn for that. And that will get me back up to where I was. In addition to what I had before, it also added the $1,164 from the federal withholding off of that 1099 that wasn't in here before we put that. So now we've essentially made the amount of their 1099R non-taxable legitimately, as long as they can substantiate those claims. That's an option. Don't follow that without the proper instruction. I just wanted you all to show that some of the options legitimately, as long as you probe and ask the right questions and derive the right information from them, there are pathways legitimately to assisting them with their tax returns. But again, cross those T's, dot those I's. Don't assume anything, and do not assume that you can just put what you want without having any way to prove it, because the IRS will be right up on you asking, how come you did this? All right. I want to end with this, which is where we'll start next time. All right. There's two forms that I didn't get into today as much as I would like to, and that is the 1099-C and the 1099 dividend. The 1099-C is a cancellation of debt form. It's basically allows you to put in an amount that was utilized to cancel some sort of debt. And then there's another form that goes after that called a 982 form that allows you to cancel the, I don't like to call them penalties, but the negative impact of putting in a high 1099-C form. I'm going to go on to that next time. We'll do that a little bit further. And I'm going to keep it real with y'all. The 1099 INT, I'm not going to go over this. I'm not teaching you tonight. If you can't do that, bro, you shouldn't be here. It's literally just plug and chug. So the things that are easy like that, like 1099, and like literally all you do is go to 1099 INT and put in. All right, I'll show you, but not today because it's too easy. All right, we're moving forward. All right, I ain't trying to waste our time on stuff that's really easy. 1099G, I want to go over this as well because they're not always unemployment. 1099G, we're used to it being unemployment, but sometimes in some other states, the 1099G actually represents how much it is that the IRS of the state, the state's revenue system paid you the year before. And it's best that we know how to differentiate those two. A 1099G, that's an unemployment form, will state that that's what it is. Like this one says it's the Department of Labor. All right, but sometimes it'll state that it is actually a way of them showing you what was paid in taxes before or what you received from the refund of the state the year prior. The one that I really want to go over, which we'll go over in great detail as we get a little bit further the week after, probably tomorrow, is the 1099 dividends, because this one will mess people up. Now, it's easy to look at this one and be like, yeah, all right, I can do that. That's cake. But what we have problems with is when folks give us those long sheets, when they got all these dividends, they'll give you like a big Robin Hood packet, you know what I'm saying? And it'll be like thick as the New Testament. And you got to go in there and enter all these little, the Q-SIP and all that other stuff. I need y'all to know how to do all that. There ain't no more passing the buck on that. That's plug and chug. It's just a matter of knowing where to plug the chug. So we'll go over that as well, the definition, why it is that those things are important, especially in an era where a lot of folks are trying to capitalize on things like cryptocurrency and stuff like that. But for today, I'm glad that y'all will at least be walking away with a better idea as to not only how to enter forms and then flow them properly to a Schedule C, but also when it's possible to utilize standard A deductions to your advantage. Also, how to enter a 1099R form and how it impacts your file, how to enter a 1099 SSA form for your Social Security, and also how it is to maneuver between having one dependent on file, two on file, the right ages, which ages are going to impact the refund in a positive way or in a negative way or not at all. All right. Also, how to fill out appropriately the notes, how to be as detailed as possible, how to go through that earned income credit checklist, and how to get to that very last sheet. Also, we're going to go over how to determine like what fees would be adequate, which is something that we haven't really done in detail in the past too great. But I want to make sure we at least have some idea as to how you should gauge what to possibly charge your clients, especially when we're living in a world where a lot of people do their taxes themselves and are not necessarily accustomed to paying anything over $50, $60, $75 for taxes, but they still get these weird results. That's a whole other subject. Sometimes it's necessary. We can't charge everybody a lot. All right. Sometimes you just got to do a basic job. They get a basic refund, and so they get a basic charge. But where you can go above and beyond the work you put in and the legitimate efforts that you have made to make their refund a lot better, you're able to compensate yourself accordingly. And we want to make sure we give you guys the tools to be able to do so. So let's go ahead and put a pause on our lesson for now. I want to thank y'all for being willing to pull on up, man, and just learn a little extra stuff right here, man. And now we'll keep this going for the next day, but of course we do have Christmas and all of that stuff coming up here soon too. So I hope not to keep you guys too occupied during the season, but it is very important. And keep in mind, man, y'all might be going to your screens and stuff during this little season right now, but you ain't, as you should be, going out on Christmas Day, putting out flyers and hitting up all the neighborhoods. Maybe we should do that. You know what? Yeah, I'm gonna go ahead and put that on the calendar for this Thursday. Y'all meet up at the DeLand office. We gonna go. Nah, I'm just playing. But I shouldn't be. But we should, because that's how we got the business started. I'm just gonna keep it real. And be if you still, you know, that's what it was. Well, I will go ahead and conclude, but I want to open the floor for questions as I always do. Was there anything that you guys may have any questions about? That includes YouTube if you're watching in the group, or anybody that's not on the screen right now. Any questions that you may have, concerns, anything that wasn't clear that I can address real quickly before we go ahead and close out?
No.
All right. Remember that. Okay. Bye. I'm just playing. Remember, tomorrow we're going to start with a quick pop quiz, rehashing the stuff that we learned today. Love the way you guys pulled up today with the answers. They were the right answers. And you're even familiar with how to check what the actual refund is made up of. And I know there's a couple areas where I kind of had to kind of botch it and kind of gloss over it, because I ain't gonna lie, some of it confused me and some of it I can't really explain right now. But at least I want you to know where to go in those instances. So we'll go a little further tomorrow as we get into the dividends and stuff like that. But as for today, I release y'all to the wild. Please don't be late tomorrow. All right. Don't waste my time and don't waste your time. Pull on up. And if you do, you pull up on time, I promise, as I have done since we've been doing this, I ain't gonna keep you all day. All right, let's get a couple things in there, drop them in the memory, and then hopefully by the end of this, it'll all be committed to the point where it's instinctive. Okay, and also come to the table knowing what you don't know, and don't be ashamed to ask stuff, because in my experience, y'all wait until we got 100 million clients in front of us, and no time, no free time at all. Hey, how do you do it tonight? Not arguing? Nope. Go back to the tape. Go to the tape. We talked about it there. I'm just playing. All right, guys. Thanks again. Please enjoy the rest of your day. Tell your people I said what's happening. And we'll see you tomorrow for our final session before Christmas. And we'll go ahead and pick up where we left off.